Good afternoon, traders. Going to start this video out by looking at Apollo. They got another upgrade today, and if you want to look back on my video, I took you guys step by step and told you what would happen going into the earnings. You will notice once you are in this business, you learn something new every day. I talk to veterans that have been trading for 40 years, and they say they still learn something every day. So whatever knowledge you guys can attain from other people that have already been in the worst times and prevailed, you need to just take it, because I know every day I do. I look up to my mentors. Anyways, besides the point, I'm just going to tell you what happened. We got long at 39. That was right here. I told you guys we were watching that key level. Since that was the gap up, we would be looking for an upgrade going into an earnings beat. This down move right here, we're not really too concerned about missing the first 3-4 points. I'm not trying to be greedy here, you know. We did catch this day trade, which is over a point, and then we're up roughly about 3 points now. So our target is 44 on Apollo, and that's where we will sell majority of our position. We're already out of a quarter of position now. 75% remains, and our stops at 41.36, which is right below our key support level. Next trade that I have to point out is probably my biggest trade in the last 6 months that I've made the most on. It was the Euro US dollar call, and it just played out perfectly. You guys already know our strategy. It's the low strategy. We got long at 129.10. We just sold today around this 133 level. We missed out on a little bit, but the reason I sold is you see this downtrend dating back from a few months ago. We thought that there would be a little bit of supply in there, and that would cause it to head back down. So like I said, I'm not trying to be greedy. If I could make multiple pips on a low risk swing trade, I'm happy to, and this was exactly that, a low risk trade. As soon as we got above our level here, and we just started allocating more capital, and we really pushed this one to the limit. So just to note, this weekend I am doing a video to show you guys exactly what this strategy takes to make it profitable, and I'll walk you guys through step by step on different plays. It works intraday, it works off the 1 hour, works off of the daily, so look forward to that this weekend. On my Twitter account, I told you guys that I started scaling into Family Dollar and McDonald's. I'm going to show you why McDonald's. Right, 71.85 was the April high, and this was really the major level that we needed to get past so we could get up to the 80 level, which we've been at for a while now. Basically a consolidation for a little over a month, and then that's when we started getting some selling pressure. So now we're down here, and like I said, the reason I'm scaling in is because, one, here's the 200-day moving average. Not only are you going to see algorithms buying off this level, but you have a key 71.85 level, which was basically the line in the sand that we needed to get past before the up move. There's going to be buying between 71.50 and this key 72.78 level. I only took about 15% of the total position today, and I'm just going to keep buying roughly 10 to 15% every day until I get to my core position. I'll keep you updated on that. Next, we'll just take a quick look at Family Dollar. Nothing's really changed here, except for the last 2 days we've got a little buying come in. And if we hold this 43.05, that's what I'm really looking at to see us move higher. I took roughly about 10% of my total core position that I will be entering in here. And as we go lower, approaching the 42 level, which was the May high, I'm just going to keep gunning in. And this thing kind of looks like McDonald's. You see the 200 here, and then you see our key 42 level. Alright, this is our next new candidate that we're putting on our list for big moves down. I'll show you in a moment the intraday chart. But ever since we put in this high back here in 01, we've had a large descending trend line that we haven't been able to break past in this year, since we've just been consolidating off the drastic move we had when the REIT crisis. Now, going back just a little bit, in the mid-90s, these pharma companies were on fire. You could go back and look at all of them on your own time, but they were coming out with drugs that people never heard of. We were breaking out of a whole new revolution in the pharmaceutical industry. They were having pills that did everything, and that's really what caused these things to run up so much. Going up into the 2000 session, we were pretty much trading in a range. Everyone was thinking the world was going to come to an end. So more or less, that's just a brief view of what you need to look for when you're looking at these companies. They haven't done a whole lot since this bottom in March, when everything else has had drastic moves. On the intraday chart, they gapped it down from 37.15, which was yesterday's close, and today we hit a low at around 35.55, so roughly 2.5 points. And we'll just keep doing the same thing. We'll identify when the sellers are done, and that's when we'll start scaling in. Taking a quick look on Alcoa, they did report better numbers, but a lot of times what happens when you're going into earnings is all the hype is being built up before the earnings get reported. So what happens is when the earnings day eventually comes and they don't have really blockbuster earnings report, they'll start scaling out of the positions because they bought it expecting something else. Remember, you buy the news, you sell the rumor. Alright, good luck trading the rest of the day, guys, and I'll get you out a video after the close.